So good evening, everyone. Welcome to Q4FY22 earnings conference call of JK Paper Limited. As a reminder, all the participants' lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Please note that this conference is being recorded. I would like to welcome Shri A.S. Mehta, President and Director, and Shri Veerappan K.R., Chief Financial Officer of JK Paper, along with the senior management team. I thank them for giving us this opportunity. I shall now hand over the call to the management for the opening remark. Over to you, sir.
Can you mute that notification? It is a little disturbing. Thank karke. From there and they can. Achna ji?
What happened?
Okay. Hello?
She has muted herself.
It was before you. Hey, just get it a little, this one left. The participants, let's see the participants. Yeah, okay. Okay, I think we'll get started.
All right. Very good afternoon, everybody. There on the call, and thank you for being with us at this point of time. With me, certainly Archana mentioned me and Veerappan, but we have the dear friend Kumar Swami, who has been talking to you people all the time, and also Ashok and his team. So, I mean, the results you have seen and the presentation, we will be making this. So, Anil will be making a presentation from Ashok's team, and thereafter we can have a question answer. And any question or any clarification or anything you would like to know from me and Veerappan, Kumar, and also Ashok. So we are there. Thank you once again. Of course, I see some interest in the script from last few months. And with this, thank you very much.
Good afternoon, everyone. I hope everyone is, able to hear us. Ashnachi?
Yes, sir.
Okay. So good afternoon, everyone, and welcome to all for fourth quarter conference call. And this presentation we have just uploaded in the today morning on the stock exchange as well as our website also. So everyone can go through in detail or can download this. As you know, we are the JK organization 4 billion group. So having more than 30 manufacturing plant and present in more than 100 countries. Plant as well as we have export in these countries and employment of more than 40,000 across our plants and businesses. And we have the businesses in paper, tire, Lakshmi Cement, which is cement business, and seed business in JK Agri-Genetic, and dairy business in Omang Dairies. And we also have JK Feller, which is in automotive. And we also have our ventures in defense, education, as well as hospitals. So first time in paper also we crossed the 4,000 crore turnover. So we have reported 4,244 consolidated turnover. Next. So we have more than 80 years journey now in paper, started in 1938 in Bhopal with straw board manufacturing, and 1962 first time the fine paper, writing and printing paper in our Odisha plant in JKPM unit, and 1992 we acquired the CPM Gujarat plant and from the BFR, and we turned it around within 3 years. So where we have expanded twice in 2007 as well as last 2022 we have commissioned new packaging board plant also. 2005 we entered into the coating plant, coated paper also, so at our Odisha plant. And 2007 we entered into first time in high-end packaging board plant in Gujarat, where we have recently expanded and put up a 170,000 ton board machine in 2022. We have just commissioned in January 2022. 2013 we expanded in state-of-the-art new paper machine, the writing printing paper line in our Odisha plant. And in 2018, we acquired the Silk Paper Mills Limited also through the IBC process. and 2022 we have just commissioned packaging board machine. So starting from 3,600 tons per annum capacity in 1938, so we are standing today at 7,61,000 metric ton. And we have a lot of first in India, starting from first integrated pulp and paper company and third largest paper company in the world to get PPM Excellence Award from Japanese Institute of Plant Maintenance, and first paper mill to get ISO 9001 and ISO 14001. First to invest in world-class pulp mill, Maxo, in around 98, 99. And first to brand copier paper in India. Earlier it used to be unbranded copier. So of course, a lot of A grade and B grade unbranded are also there today. So we were the first to brand copier paper. We were the first to introduce a surface size wood-free paper, which is called Maplitho Hybrid in our Odisha facility. And we were the first, of course, in 2011, we got the FSC certification also, which has increased over the years now, the number of acres in plantation. We got Golden Peacock Environment Management Award in 2013. And recently, in 2022, we got Industry 4.0 award from PICCI under the overall digital transformation category by the unit JKPM. Next. So in shareholding pattern, if you see 49.6% is held by the promoters, with followed by institutions 7%, and of course individuals have a larger share, which is 28.7% beyond promoters, and trust about 5.7%, and best is 8.9%. So we have 3 units, of course, started with JKPM Odisha on the right-hand side top, and then unit CPM Gujarat, where we have recently expanded, and Sirpur paper, which we acquired in 2018. So this is the 3rd unit, and we have 3 segments, as you know. And writing printing paper, we have copier paper and Maplitho. Copier, we are the market leader with 28% current market share, and in coated paper, we have 11% market share. And here, Balarpur is the 2nd one, but yes, 3rd mostly it comes from the import only. So 11% itself within the 2 market domestic players is a major share. And in packaging board, we have 17% market share, but yes, this will improve further because we have recently started our new packaging board plant in Gujarat. So this will increase the market share further once full utilization of the plant is there. So these are the 3 units we have on the eastern, western part and central of the country, which is JKPM in the western part, eastern part, unit CPM, which is closer to Surat in the western part of the country, and Sirpur paper mills in the Telangana. So total capacity of the company is 7,61,000 ton. We are writing and printing paper is 4,15,000, which is copier and Maplitho, and coated paper is 55,000, and packaging board, which is high growth segment, where we have now 2,91,000 ton after our recent expansion in Surat plant. And we have, of course, 4 regional offices, 18 warehouses, and we have more than 350 trade partners and over 4,000 dealers. We have a large distribution network for copier, and of course, we have started a little bit in retail also. As far as 21-22 higher performance is concerned, so our capacity utilization was 113% in full year and 115% in the 4th quarter. And commercial production of new packaging board also started on 14 January 2022, which has come up very well and ramped up very well. In the month of March.
Archana, there are some back noises are there that request if all of them can mute themselves.
You can also mute it. You're a co-host, huh? Just go and mute also.
I request participants to please keep your lines muted.
Thanks.
So the packaging board has started very well now. In fact, in the month of March, utilization is 85%, and as sitting today, so it is more than 90% utilization. And company, as you know, in the last full year, 21-22, we have achieved highest consolidated turnover of 4,244 crore, EBITDA of more than 1,000 crore, so 1,121 crore, and PAT first time more than 500 crore, which is around 544 crore. As you know, raw material is one of the major drivers of profitability in pulp and paper industry. So we have continuously having a thrust on the plantation activities with 5.63 crore saplings distributed last year compared to 4.45 crore previous year. And first time highest 45,000 acres of plantation we have covered compared to last year 32,700 acres in all our 3 units of JK Paper Limited. So we are continue to have a good and carbon positive status. So we are planting more trees than what we are consuming and utilizing year-on-year basis. So as you know, I mean, we are also looking at a lot of specialty products. So and recently we have developed a few products in the last year also. So JK Absorbent Craft is one of them. JK Antifungal is there in the packaging board, and JK Copier Plus, which is in antimicrobial paper, and some other papers specialty, and more will come. So we are increasing that basket also. So company, of course, in last 2 years we have increased the debt because of the new packaging board expansion has come, and we have used the money there. So, but still, and there was a little delay in the packaging board project also, and COVID impact, but still company is able to maintain credit rating of AA- from both the rating agencies, CRISIL as well as India Ratings. And in short term, we continue to enjoy the highest A1+ rating. So these are the consolidated financials broadly for the Q4 as well as 12 months, 21-22 versus corresponding years. Sales volume, we have clocked more than 6 lakh ton for the full year, and 1.91 lakh ton, 1.92 rather, for the Q4, compared to about 5 lakh ton last year for the 12 months, and for the Q4 around 1,62,000 ton last year. So we have achieved highest ever sales volume for the quarter as well as 12 months. Gross revenue, as I have just mentioned, so we have crossed 4,000 crore, so 4,244 crore first time compared to 3,000 crore last year. So this is 41.5% growth over the previous year, and 46% for the quarter, which is 1,431 crore compared to 980 crore last year. And our EBITDA, first time we crossed 1,000 crore rupees consolidated, which is 1122 crores compared to 673 crore last year, which is 67% increase over the last year. And for the quarter, 358 crore compared to 265 crore last year, about 35% growth. And EBITDA margin is 26.7% for the fourth quarter and 28.3% for the 12 months compared to 29.5% for last year and 24.5% last year for full 12 months. So these are standalone financials. Broadly, we have already covered. So this we have given stock cost and power and fuel and each and every line items. You can go through and you can come up with the question answer if you have any queries. So these are the last 5 years. If you see how we have increased our asset utilization from FY 2017, it was 100, so it is 109. So highest ever capacity utilization in last 5 years. And of course, interest rate also have reduced from FY 2017 to 22 almost by 35%, 34%. And ROC has improved from last year, 15.5%. But yes, this is because packaging board has just started. So it will improve further once full utilization of the plant, and because capital employed is already sitting in the ROC as a base, so it will improve further by higher utilization of the new plant. As you can see, so we are deleveraging our balance sheet except the last 2 years because of the new expansion. We have added some debt. Otherwise, our net debt equity ratio is 0.7, so less than that continuously, and net debt EBITDA ratio is less than two times. Of course, once new project EBITDA comes fully, it will come down further. And interest coverage ratio is more than 11 times, which will increase further once new EBITDA is there fully. And of course, rating we have discussed, so we are continue to enjoy a AA- stable rating. So this is in last 15 years how we have expanded. Of course, we have done 5 expansions and acquisition also. Coated paper packaging board in 2007, 2013 uncoated paper machine in our Odisha plant, acquisition of Sirpur in 2018, and 2022 we have just commissioned our packaging board plant. So our volume have increased 5 times. Our turnover has increased about 6 times, 5.8 times, and assets have increased 7 times. And our net worth equity has increased 15 times over these last 15 years. As you know, I mentioned that raw material is one of the biggest driver in paper industry, and we have started a lot of thrust on this from 2011 onwards. So within catchment area, we have almost now 100%, barring last year only. So everything is coming within our closer to our factory, so that logistic cost is very low. And we have increased our plantation activities further, because in between it was not much required, and now we have expanded our facility in Surat. So first time 45,000 acres we have done last year, 2021-22, which is the highest in last 10 years. And this will keep on increasing. And total acreage we have covered now more than 5 lakh acres till date. And more plantation we are doing within 200 kilometers, so that logistic cost is low. And of course, we'll be able to enjoy more and more what we do plantation nearby our areas. So these are some awards, accolades we received last year, 21-22. So JK Paper won Platinum Award, Industry 4.0 Award from FICCI under overall digital transformation category. Our unit JKPM received 22nd National Award for Excellence in Energy Management from CII. And the same unit JKPM received Best Safety Award from Ministry of Labor and Employment also. And 7 teams of unit JKPM received Excellence and Par Excellence Award in 35th National Convention on Quality Concepts organized by Quality Council Forum of India. And our unit CPM received the Best Employer Brand Awards 2021 in last year. And of course, CSR also, because that is also one of the where we keep on, even before it was mandatory as per the Company Act. So we received an award 2021 in the category CSR and Community Development Initiatives, awarded by Odisha CSR Forum. As I just mentioned, CSR, in fact, before it started by as a mandatory requirement of the Companies Act, we were doing this much earlier. And of course, we have increased our footprint further. And last year, we have expended 10.44 crore rupees. We have incurred the expenditure, and we have increased our footprint to 819 villages and more than 457,000 beneficiaries. And our focus is more on the youth, women, and of course, marginal and poor farmers. And these are a few awards we have taken in CSR categories last year. And Think CSR Innovation Award by the Odisha government, and back the CSR Gold Award for Excellence in Sustaining and Increasing Green Cover within 200 kilometers over both of our plant, Odisha as well as Gujarat. So, and the last one is received an award from Integrated Tribal Development Agency, Rayagada, for innovation on occasion of first ever woman business leader Mela Bhaveshwar in the month of May, recently, few weeks back. So these are a few standard financials you can go through, and mostly we have touched in consolidated numbers anyway. And our EBITDA margin, as you can see, standalone is 26%. Net worth is more than 3,000 crore now, and return on equity is 18.1% for full year 21-22. And this we have seen. So we are continuing to reduce our debt. So debt EBITDA is about 2 times, which will further come down once new projects throws more EBITDA and utilization increase. That's all. So if you have any questions on presentation, otherwise we can open for the question answers.
Thank you, sir. Now I request participants to raise hands to ask questions. I also request to please limit your questions to 2 per participants, because there are many participants in the queue. I request Deepak Lalwani to go ahead and ask the question.
Hi, sir. Thank you for the opportunity, and congrats on a good set of numbers. So what has been the price hikes that we've taken in Q4, and are we covered for the inflation that the industry is seeing in chemical and coal prices?
So the price rise in the Q4, I mean, you need to compare with respect to the last year Q4 is one part. Standalone, when you compare the preceding quarter Q3 to Q4, the price hike was close to something around 10-12% preceding quarter. And compared to last year same quarter, when you compare, it is something around 20% plus. And yes, we are more or less whatever the chemical and commodity prices increased, the cost increase, we were able to pass it on. I mean, this is on the strength of demand in the market, and there was an opportunity to pass it on. So we could pass it on.
Got it, sir. And just a follow up on that. So are we getting supplies from coal linkages, which is benefiting us, because our power cost in this quarter was almost flat on a quarter-on-quarter basis, despite having the new plant. So just wanted some understanding on that.
Only thing is that I must say that we were fortunate enough that one in our Odisha and also Telangana, these two plants, the Coal India was far more supportive, and we could get sizable quantity against our allocation. And also to some extent, we had coal stock, which was a much lower cost. But in the western part, Gujarat, in fact, we had to purchase the costlier coal, which is imported coal, because the Coal India supplies was very erratic. In fact, we did not get coal allocation, and also the auctions quantity we had. So the supply was the issue. And fortunate that we could contain our energy costs during this quarter.
Okay, sir. So this situation is likely to be there for the next 2 quarters as well?
No, I don't think. Telangana, yes, of course, it is still comfortable, but not at Odisha now, because there also to some extent the supplies from Coal India have been erratic. But let's see. But still, I would say that we would be better than the industry on the energy front.
Got it, sir. And sir, since we spoke
Can
about...
you just come in the queue, because there are many participants lined up.
Okay, sure.
Thank you. So next we have Mr. Bharat Bhagnani. So please go ahead.
Yeah, thanks. I just have one question. Since you're already running at close to full capacity, or probably even more at some of the plants, any plans for capacity expansion beyond what we already have, including the recently commissioned Gujarat packaging board plant?
Bharat, I would only say, for the benefit of all the people available here and attending this, that just after expansion of 2,000 crore, I don't think that it is expected from us to invest further in the capacity immediately. Of course, we are running our plant at full capacity as far as the Odisha plant is concerned. Also, the Gujarat, the older capacities, new capacity is still it has 90% so our first priority is to utilize this capacity beyond 100%. So that itself is kind of an extra volume coming from this. The Sirpur, we have a 20% capacity available already, because we were only at 75-80%. Right now, also it is close to 80% plus. So again, the 20% capacity is still available from the Sirpur plant. So these two unutilized capacities will provide additional volume during this fiscal year. So at this point of time in the paper, there is no major expansion, but yes, some minor debottlenecking and some improvement will certainly take place, and we would try to take some additional volume.
So then, which means that this would be the peak capacity available to us, at least for the next few years.
I don't know next few means what, but yes, I would say that next two to 3 years, throughput paper capacity will be this.
Actually, the full impact of the expansion at CPM is yet to come in. We just started on January 14, and it has to be ramped up to its full capacity, as well as we operated only for 2.5 months, so the 12 months impact also will come in. So that you should factor in your analysis.
Okay, thank you.
Next, we have Mr. Pradyumna. Please go ahead.
Hi, great performance by the team. And this is not just for the quarter, but for the last 4-5, I think at least since 2017, I would say. And to do the CapEx in this stipulated time, despite COVID, I think it's just a great achievement. I just have a couple of questions to ask. One on the blended NSR. In one of the sites, I think the NSR for Q4 was around 69,800. What would be the breakup between coated, uncoated, and packaging board? That's number one. Secondly, you've shown interest cost of around 32 crores for the quarter, while your debt number is over 3,000 crores on the entire company. So how does that add up? Because the quarterly interest costs seem to be very low. And what is the outlook for debt reduction in FY23 and 24 going forward? Thank you.
See, I would say that the weighted average NSR is I mean, you have mentioned this. I don't think that.
थोड़े business model compare करके देखो कि क्यों
Please mute yourself, Mr. Arvind. Please mute yourself. All right. See the NSR, I mean, as you have yourself quoted 69,000 and odd. Yes, that's a weighted average NSR. And I don't think it is appropriate to give the product-wise NSR at this point of time, because there's certainly a confidential information and I don't want to disclose this. As far as your question on regarding interest, Ashok will explain.
Yeah, regarding interest, that quarterly interest 32 crore, which you are counting on that total consolidated loan of 3,000 crore. So it seems that mostly loan has been added in the last quarter only, so that simply you can't analyze it by that percentage. And but our interest cost is low because loan has been negotiated at a best rate, as well as that Forex loan we are in that some positive MTM.
So broadly speaking, what would be the interest rate? Around 5 to 6%, or is that too low?
Interest rate will be close to, if you consider, it should be around 6.5 to 7%.
Last year we have delivered 6.9%, 21-22 on a blended.
So the interest rate is rising, so you can consider around 7%.
Got it. And in terms of the debt reduction in the next couple of years, FY23 and 24?
So that is a loan repayment which will be close to 300 crore or so, 300 to 350 crore.
Per annum.
Per annum.
Per annum, yes.
And also once we have a healthy cash surplus, means we would see the opportunity if there is a further debt reduction, as we see.
Okay, and the company also has...
Pradyumna, can you just come later? There are many participants lined up.
Sure, all right, thank you.
Next, I request Mr. Saurav Datta. So please go ahead.
Hi, thanks. Firstly, just a couple of questions. Firstly, on coal. When it comes to your coal requirements, it will be helpful to understand how the requirement mix has changed for the March quarter, and so as the domestic linkages and the Indonesian imports are concerned. Also, how have the costs changed for both of them year on year?
Okay. Any other questions, Saurav?
Yes, there's a second question. On the paperboard part, just until a couple of years ago, I think pharmaceutical companies were comfortably your biggest buyers. So is food grade as big or even bigger now? And how do you see the eventual paperboard demand mix change going forward?
Okay. So as far as the coal is concerned, I would say that our total coal requirement is close to 6 lakhs ton, close to. I mean, sometime it is 5 odd, and now with the packaging board and all other things, it is close to 6 lakh. Out of that 6 lakh, broadly, I would say that 4.5 or 5 lakh, we have the linkages with the Coal India, Singareni, and Western Coalfield, and all these companies. So, I mean, the only balance left out is a lakh of ton. That also sometime we participate in the e-auction and the other options available from the Coal India. Otherwise, we import from Indonesia. So this is broad coal our mix is. Incidentally, the last year and currently the coal scenario in the country is very, very critical. And the priority of the government is also for the power sector. So since we come in the non-priority sector, so we get coal sometime we don't get coal. But we were fortunate that at our Odisha, as I replied in a previous question, that the supplies from Coal India for our Odisha and Telangana plant, it was good, I would say. And that is why our coal costs remain under control, under check. But the Gujarat plant, the cost increase was sizable. This is on this scenario. In fact, in going forward also, the coal scenario is critical. And we will have to face this. And this quarter, because again, the summer months and the peak demand of power and the pressure on the power plant remains. So this is the time where we will need to manage this coal scenario. Hopefully, we will sail through.
All right. Also, I had mentioned the cost changes for both domestic linkages and for imported
See,
coal.
the domestic linkages, there is no major shift because the domestic cost is, these are all long-term linkages and the rates are more or less free. So that's not an issue. Issue is the imported coal, because the cost imported coal, it has gone from something around 4,000 rupees a ton to now 10,000 rupees a ton. But in overall mix, the cost increase is not that, but yes, there is a sizable cost increase. As far as the packaging board question is concerned, pharmaceutical on the virgin packaging consumption as a total overall pie, pharma sector is close to 15 to 20%. And the food sector was earlier something around 20%. It has gone up to now almost 30%.
All right. Thanks a lot. That's it from my side.
Thank you. Now I request Aishwarya sir to please go ahead. Over to you, sir.
Yeah, thank you very much. Sir, can you just help us on the demand outlook for say next 3 to 6 months?
Okay. See the demand when we talk about the different categories of paper, let me first attempt the writing printing paper, which is a white paper. And in that it is coated as well as uncoated. See, the corona has also induced one shift, and which is likely to be a irreversible shift. And that shift is that the growth earlier we used to see in the education sector, to my mind, it is likely to be a muted growth. So earlier we used to think that this particular category will grow at 4-5%. Now it is likely that it may grow at 2 to 3%. So this is one part. As far as the office paper is concerned, which is our copier paper, so the growth, to my mind, because of all the digital and the hybrid model of physical office and the work from home, so the consumption or the growth may be something around 4%. As far as the packaging board is concerned, it is a very, very strong, robust growing product category. And it is growing at double digit and likely to grow with double digit. So this is what the market outlook is right now. If you talk about only 6 months, I would say that the growth is going to be better than what I have painted this picture. This is a long-term picture. But this next 6 months and maybe next another 2-3 years, the growth may be better than the long-term growth.
Sure. So which implies, so the second question, sir, when if the demand is good and even the longer term outlook also seems to be good. So with that into consideration, what could be the potential threat for us? Whether the imports, the paper imports, which the traders are not able to do because of the logistics issue, that could be the upcoming risk, or how we should see it?
No, why should there be? Because there is a capacity available, and if there is no capacity at the right time, there will be capacity additions. See, the domestic industry should be able to meet the total domestic demand, except the newsprint, where we are not there. But otherwise, all product categories, there should be a domestic capacity available.
Oh, I mean, sir, what I understood, and you can correct me, that earlier there was import as well as the domestic supplies. And because of the imports, whenever there is a fall into the paper prices internationally, people import the paper and sell it in India. And that's where you see the margin pressure.
Right. See, please understand, yes, these are some transactional periods where the global paper prices are much lower. That time, the trading community, they see the opportunity and there may be some impact. But see, from last 2-3 years, this was not the scenario because the global paper prices were also at a reasonable level. They were not too low. And right now, in fact, the global paper prices are higher than the domestic prices. So I don't foresee in the near future that scenario.
And sir, the last question, how long do you see the global paper prices to remain at an elevated level?
See, as long as there are higher energy costs, there are higher commodity prices or commodity costs. I mean, when the input costs remain at that level, paper prices will have no respite. In fact, the pulp prices right now, they are $950 a ton is the pulp cost or the pulp price. So what to talk about the paper prices? I mean, there should be always $1,000 a ton minimum.
Sure, sir. Thank you very much. This is really helpful.
Thank you.
Best of luck.
I request Mr. Naresh Kataria to go ahead. Over to you, sir.
Hi, thank you. My question is on the pulp mill, which was upgraded recently along with the board plant upgrade in Gujarat. Can you give us some color on, has it started contributing to better products and hence better NSR margins at the Gujarat pulp mill upgrade for the old plant?
Yes, we upgraded and this pulp mill has just started. In fact, we commissioned in the month of January, and now that pulp mill is also operating at 90% plus capacity. So it has helped us, and I mean, to some extent, we don't have to purchase this category of pulp from overseas, because otherwise this pulp, right now our cost would be in the band of $500, $600 a ton. Otherwise, we would have imported at $950 a ton. So this is what the difference this has made. And yes, it will improve the profitability of our Gujarat plant, because there is a good amount of integration now for the packaging board production from this pulp mill.
Got it, sir. And my last question is on the Gujarat board plant. So we have about 170,000 tons,
yes.
Roughly 45,000 tons a quarter. How much has it been, what was the production in Q4 for boards in Gujarat? Because it started on 14 Jan and maybe it ramped up slowly. So I'm just trying to see what's the incremental delta we will see in the coming quarters for the board plant in Gujarat.
See, as I said that since we commissioned only on 14th of January and it was a ramp up phase, so the production was lower. So, I mean, you can think that for 2.5 months, it was close to 80% plus. And now we would try to achieve 100% in time to come.
Perfect. Thank you and best wishes.
Thank you.
I request Gunjan Kabra to go ahead.
So thank you for the opportunity. So my first question is, so from Jan onwards, wood pulp prices globally are also an increasing trend. Like you mentioned, it's in Europe, it's around $1,000, and in North America, it's around $900. So how is the price fed out for us in India? Because there was a little bit gross margin pressure seen on quarter basis. And also, as per my understanding, if the pulp prices are beyond 650 tons globally, we stand to benefit as we are vertically integrated. So how are we seeing the prices in India, and how much reliance is on imports, considering we have to import softwood and hardwood? So how much of the raw material requirement is imported? And so second question is, why did the other expenses increase quarter on quarter significantly?
All right. See, I've already replied that the pulp prices currently They are all $1,000, $1,100 or $950 different grade of pulp. These are the global prices. In India, I mean, there is no pulp price per se, because in India, pulp is not sold by the local players. The pulp is only purchased by the Indian players from the overseas sources. So those global prices of the pulp are relevant for India as well if somebody wants to buy the pulp. But the cost of production of pulp for different companies, it is different. So this is one scenario. As far as our reliance on the imported pulp is concerned, predominantly we import the BCTMP, which is a mechanical pulp for our packaging board, and very small quantity of softwood pulp for our some special variety of paper, but there is a very small quantity. I will have no major impact. But yes, BCTMP, which is a mechanical pulp, our reliance is there on the sources from overseas, and the cost has gone up substantially, something around from $600 a ton to $900 a ton at this point of time. But again, the element of that in our total pulp is something around 15 to 20%. And yes, when the cost has gone up, accordingly, the prices of the packaging board has also gone up.
Okay. And so have the other expenses increased significantly quarter-on-quarter basis? Is there any particular component?
It's mainly because of that increase in export. So export expenses has increased. And also you may have seen in our note that some provision we have made on our Myanmar operation. So these are the two basic reasons. The others are some of the CSR activity and others. Some repair maintenance. Those are general routine items.
Okay. Okay. Thank you so much.
Now I request Mr. Puneet Kabra to go ahead. Over to you, sir.
Yeah, good evening, sir. Just one confirmation again. So are we saying that packaging board operated at the new unit, operated at 80% utilization average from 15th of Jan till the end of the quarter?
Yes, more or less, yes.
Okay. The second question I had was, sir, Sirpur, we are still not at 100% utilization, while rest of our plants are operating over 100. So what is the hindrance or what is the roadmap to get Sirpur to cross the 100% utilization?
See, the Sirpur, this unit was shut for many years, and this is a very old plant. Of course, we could not anticipate some of the gray areas in the older machine. And this is what we did some work. And that is the reason that now plant is stable at least 80% plus production level. Now, there are some more areas which we have now identified and we are working on it. And hopefully, I mean, we should do better than this in coming months.
So any additional capex that is lined up for Sirpur? I recollect we were going to reinstall the boiler or put a new boiler and do something. So are those big ticket capexes done for the capacity of 135 we have right now?
No, those have already been done, and that is why we have a stable 80-85% production now. That boiler and everything we have commissioned in 21-22 itself, all the big ticket items. But certainly there are some tidbits and the smaller improvement capexes are there, which we will do in 22-23 to achieve that the production level of 90% plus.
And so my second question was on the capex we had announced for Ludhiana. Any update that you can share on that?
See, the Ludhiana, the construction is going on, and this plant, we thought that we will commission sometime in November, December. And I hope that there may be some hiccup initially because of all those licenses and the permissions and approvals, and those things are still there. And so there may be some few days here or there, but otherwise we are still hopeful that we should commission, I mean, start the trial production sometime in October, November.
And my last question, sir, is on saplings. Our presentation talks about hybrid saplings that we have distributed. Is there any number that we have in terms of how much of, when do we start getting this hybrid output? And if we are already doing it, then what percentage it is and what kind of difference is it going to make to us?
See, these hybrid means these have been happening from ages. It is not that today we have done it. See, some species, the hybrid you will do in 1 year. Some other varieties will be in the earlier years. So that goes on. So there is no such a specific number of any hybrid, but yes, always there are some improvement activities where we improve the clones, high yielding clones and the shorter maturity clones that goes on.
So last thing,
can you just come in the queue? There are many participants lined up.
All right, thank you.
Now I request Mr. Ajinkya to go ahead with the questions. Mr. Ajinkya? Okay, let's move to Mr. Srinath. Sir, please go ahead.
Seems to be poor internet connection, Ajinkya.
Ajinkya, sir, you're not audible.
Shaji, we can take next question.
Yeah, please, let's move to Mr. Srinath. Sir, please ask your questions.
Yeah, my first question is,
Yes, Srinath, can't hear you. What is your question?
no, I was waiting for Ajinkya. He seems to be asking something.
Please, you go ahead. You go ahead.
So my first question is, what is the basis of our price increase or decrease? Is it to maintain EBITDA per ton, or is it to maintain a certain level of ROE? What governs our pricing decisions?
See, I mean, I can only say that the most theoretical question ever I have faced is this only, because the market does not operate on my expectation whether to maintain the ROCE or the ROI or anything. See, the pricing is always based on my desire to cover my cost and the desire to have a profitability, but at the same time, the market realities are distinct and different, and those are the realities. So based on the market scenario, you always take a pricing call and declare the price. Is basically the demand and supply scenario that determines the pricing.
Yeah, I mean, I'm not fully clear because pricing is an individual action, right? Company action. It's not a. So
yeah, it's a company's action, but it is see the canvas where you paint a picture ultimately is the canvas, and the market is the canvas.
Sure. Yeah, and my final question is a clarification. Our website says that the defense business is a division of JK Paper. Would that be a correct thing?
Yes, you are absolutely right. Once we have acquired the defense business or the electronics business,
right.
Now, so in the 31st March, as we have given in our result note also, that this has been completed, that activity, and now this will be the division of JK Paper.
So can you throw some light on the prospects and what is the plan on this division?
I would request Kumar Swamy to talk on this.
It has, for the business, has a lot of potential, especially in the defense areas, night vision cameras and, onboard computers for torpedoes, etc. They have quite a bit of capabilities. And you must have been seeing from the government. Government is opening up that sector to as well as making more percentage of products available within India to be purchased by defense. It also has some civilian applications like this people counting systems, car park assistance systems, etc., which has very good civilian applications. Also, aircraft movements, the quality of landing, etc., tracking at the airport, and those kinds of applications are also there. It has a very, as well as this new LCA, the front panel, they have been developing it with the HAL. They are likely to get some orders. Their prospects are good for the company, or rather division, now a division of JK Paper.
Any rationale for this unrelated diversification, significantly unrelated diversification?
It is seemingly unrelated, but they also have some IoT applications in our own plant applications, etc. Nowadays, digitization is a journey. As much as you can use AI, ML, etc. in your applications. We also use quite a bit of them in our factory. And JK Paper unit at Raigada is very heavily integrated to digitization, and sooner we will also make our western plant at Songarh also equally digitized. They have IoT applications as well for industrial application.
Sure. Maybe I'll come back in the queue. Thank you.
Yeah.
Now I request Mr. Harshil Solanki to go ahead.
We can
just unmute himself.
So next, Mr. Nishit Shah. So please go ahead with your questions.
Sorry, I am back. Sorry.
Yes, Mr. Harshil, please go ahead.
I wanted to check what products the companies are looking to launch for replacing single-use plastics. And second is, any thoughts on whether bamboo can be used as an alternative for making paper or say paper cutlery? Yeah, that were two questions.
Thank you. See, the single-use plastic, there are many items where we have already introduced the paper-based product, and more particularly, let's say, the paper straw is one where it is already replaced in many parts as a plastic straw. So the paper straw is already available. Then is the plastic glasses and plastic cups. So already there are paper cups and paper glasses are available in the market. So we have already introduced, and the sizable quantity has started moving. Then the paper bags are the one category where there is a sizable demand of paper bags now, because they have replaced the plastic bags. So these we have already introduced. Now going forward, I would say that some more variety of paper-based, the plates or the cups or the glasses or something else will come. So that those products are under development, and we will introduce. So this is on the plastic part. On the bamboo part, your question is right. In fact, I would take all of you to the history where the paper was started based on the bamboo, because the bamboo was basic raw material earlier to produce the paper. But as the technology evolved and there are technological advancement happens, so gradually the bamboo has come down from a total ratio of raw material. And now in the new pulping technology, the bamboo is totally out, because the newer technology where you have a better fiber and better quality of a pulp you get from the wood, where the bamboo creates problem in the line, it creates problem for the boiler. So now the bamboo is hardly used in the paper making by the integrated advanced mills. There may be some more mills and they will continue to use bamboo as a source of raw material. But in the newer technology, bamboo does not have a place.
Okay.
Now I request Mr. Nishit Shah to go ahead, please.
Good evening, sir, and thank you for this opportunity. Sir, I would like to understand what is our current percentage of exports?
Okay. Right now, our export is something around, I would say, 7-8%. And since the domestic market and the demand is so strong and robust, we would not like our domestic market to suffer. But there is a good demand in the export market as well.
So going forward, we see this percentage to be constant.
See, as long as we are able to cater our domestic demand, I would not like to vacate the domestic market, because the domestic customer and the consumers, they are far more precious and important for us, because they are all weather friends for the company and they are very loyal to the company. So we can't allow them to suffer.
Okay. Sir, there will be certain raw materials which we import. So are we facing any availability or logistic challenges there?
Yes, there are challenges because of the global supply chain disruptions and also some constraints. But I would say that there is a cost increases, but our production did not suffer because of those items.
Sir, lastly, post Q4, how much price hike have we taken?
As I said, that compared to the preceding quarter, means the Q3 to Q4, the price increases were close to 7-8% in some category, 10% in other category. So it may be close to 10-11%.
So my question is actually post Q4. So is it possible to share?
Sorry? Oh, right now?
In April and May.
Oh, in April and May, I would say that there is no major cost increases, and the same way there is no major selling price increase. But yes, in some product categories, we have done 3 to 4% price increase.
Yes, sir. Thank you.
Thank you.
Now I request Mr. Prithviraj to go ahead.
Yes, sir. So, just a follow-up. So, since we have more scope in terms of utilization in our Sidhpur and new packaging plant, and the demand also seems to be good, so what kind of potential in terms of revenue and EBITDA can we factor in from these two facilities?
See, as I said, that the packaging board capacity, which is 170,000 ton. So right now, I mean, we have just started. So even if it was 80%, so rest 20% means on an annualized basis, something around 30-40,000 ton of packaging board will be available. And 40,000 ton of packaging board means close to 300 crore of revenue. The Sirpur paper, I mean, as I said that it is 80%, let's say. So even if we achieve 90%, so something around 15 to 20,000 ton of additional production will be available. And that should also give us something around 150 to 200 crore of turnover. So on the overall top line, I mean, the full utilization can give additional 500 crore of revenue.
Yes.
Okay, sir. And the EBITDA from these two units, given the higher utilization, how much would that be?
See, the EBITDA, I mean, I would say that current rate is what, 26%, 27%?
Yes,
so maybe 1-2% here or there if the other factors remain the same.
Okay. Okay, got it. And sir, in our Sirpur operations, we'll see that the other income was not there in this quarter. So, are the incentives, still on track, or has it been withdrawn?
No, the incentives are on track. In fact, during this quarter, because on some incentive, there was some interpretation issue. So we took a hit in this quarter, but otherwise incentives are on track.
It is a cumulative effect of the previous incentive, thereby some discussion were on, but we have taken that way as per that government order and reversed some of that incentive which was under discussion.
Okay, sir. So from the next quarter,
Mr. Prithviraj, can we just give some other participant to ask the question?
Arjuna, just one follow-up I had. So, sir, from the next quarter, we can expect the 30 crore run rate to continue, right?
Not 30,
what 30
that,
crore? No. 30 crore is not the incentive.
It's around
something
that,
around 20 crore or 18 crore, no?
Yeah, right.
Yeah,
I was talking about the other income. I got the clarity. Thank you, sir.
Thank you.
Thank you so much. Now I request Aishwarya sir to go ahead.
Thank you, Archana. Sir, how do we expect the price hikes from here on, considering the high energy price and the high paper price globally?
See, the energy cost is already high. So from this level, if it further goes up, I mean, we will have to see the demand supply scenario and then correct the price. But as I said that we have already increased the prices in some product categories by 3-4%. So that should cover some nominal cost increases. But if there is any other unusual cost push, then we will have to see the demand supply and then correct the price.
Sure. So which implies that as and when there are cost push, we will look into the market situation and take the hikes. Is
Yes,
what
I
you want
agree.
to say.
Yes.
And is there a possibility to maximize the margins? You take the hike despite no cost increase because the market is able to pay for.
Of course, I mean, when for any company, if there is an opportunity to take a price from the market, it would be an effort. But certainly, I mean, every time you cannot squeeze the customer and have a price which may be unreasonable price. So we need to be reasonable to the customer, reasonable in the market to have a price also.
Sure. So realistically, from here on, I guess we are already with the demand supply, and unless there is a cost push, there is no incremental hikes. Is the way I look at it.
No, as I said that if there is an opportunity and if a customer has a willingness to pay a price, we will see it.
Sure, sir. Thank you, sir. Thank you very much.
Thank you. Now, due to time constraint, we'll take the last question from Mr. Akhil. So please go ahead.
Yeah, thanks for the opportunity. My first question is on the recycled paper. The European Union has removed the ban on imports from Europe to India, which has led to some price correction in recycled paper. Will that negatively impact the grade A paper prices as well?
See, you're right. It has some bearing on the prices of the white paper as well, because the people, those who are using the waste paper as a raw material and then producing the slightly lower quality of white paper, so their selling prices at one level will determine the price of a premium white paper. So there is some relationship, but fact remains that their cost was much higher and they were having a price which was more or less at par with the premium paper. So even if their cost goes down, their paper prices comes down, it will have no major impact on the white paper prices, because I mean, inherently the white paper, premium white paper should have a premium pricing of a differential of something around 8 to 10%. So at this point of time, I don't foresee any reason or any cause of impact on the prices of a premium white paper.
Sure, got it. This is helpful. And second and last question, so if a plant is backward integrated and has its own plantation, how their pulp prices are correlated with the global pulp prices? I mean, if it is possible to quantify. I mean, you've given a broad answer previously, but is it possible to quantify the correlation?
See, at any location, whether it is in India or overseas, if you are closer to the plantation, your pulp cost would be very, very comfortable, right? So, and all the time you will have advantage if you are integrated.
Correct.
When the backward integrated with your own catchment of plantation near to the mill. So yes, it will have a good advantage.
Is it possible to quantify?
No, I don't want to do this at this point of time because it's a very confidential information.
Sure, got it. So thank you so much and best luck for coming.
Thank you. Thank you so much.
Thank you so much, Mehta sir, Veerappan sir. Thank you, whole JK team, for giving us this opportunity, and all the best, sir.
Thank you so much. Thank you, everybody.
Thank you.
Thank you.